Financial management makes use of financial records to document the growth potential, profitability, and value of the assets of a nursery to obtain capital for operation and expansion of the firm. These records can also be used to help decide what kinds of expansion, production, purchases, and so on will be most beneficial. Financial records and proper financial management are essential to start, manage, and evaluate the success of the nursery. Financial management is at the core of the nursery business, and all aspects of the business are affected by it. I'm Dr. DeBusk, and this video discusses using finances to manage the business. Evaluating the financial management of most nurseries is a very difficult task because of the complexity of nursery operation. In the U.S., there are relatively few production nurseries that produce one product by a single system and sell that product to a single type of buyer. Therefore, it is difficult to compare and evaluate the actual cost of production. Management is evaluated on how effectively they have managed all three factors of production and primarily on how much profit is generated. Two of the most valuable financial documents for evaluating management are a balance sheet and a profit and loss statement. A balance sheet, prepared periodically by an accountant, is a statement of the financial status of the nursery on the date the balance sheet was prepared. Balance sheets are usually issued on a regular basis, monthly, quarterly, or annually, and are of greater significance when compared to similar reports for the same period of previous years. This is used to assess the financial well-being of a business. There's a constant change in the firm's assets, liabilities, and net worth, so a balance sheet is more of a snapshot in time. Assets include cash, receivables, inventory, equipment, facilities, and depreciation and allowance. Liabilities include current accounts and notes payable, accrued interest, taxes, etc., long-term mortgages and loans, and equity, stock, undistributed profits, and total owed owners. Here we have a balance sheet of Jack and Julie London's agricultural business. We have a beginning balance and ending balance. The first section includes current assets. Section C shows the net change. Parentheses in accounting indicates a negative balance. There are also non-current assets such as livestock, machinery, equipment, etc. These are added up for total assets. The other side shows current and non-current liabilities. One of the primary concerns of a nursery manager, the potential profit from the operation of the nursery, is not displayed on a balance sheet. An income statement or profit and loss statement combines the total sales over a period of time, month, quarter, or year, and subtracts the total expenses for the same period of time, showing the profit or loss developed by the firm. This is one of the most important statements provided by an accountant. If the nursery is to survive for any length of time, it must show a profit. The interpretation of a profit and loss statement, as well as other financial statements, depend upon the type of accounting system used by the firm. Most production nursery accounting systems are on a cash basis, where the expenses are recorded at the time payment is made, and income is recorded at the time of receipt. The nursery production cycle, the length of time between the initial planting of a crop and the date of harvest, is usually much longer than the accounting period of a balance sheet or profit and loss statement, which can be misleading if the nursery is changing rapidly by expanding or contracting the volume of nursery crops planted each year. Some of the larger production nurseries may be on an accrual basis to more effectively manage the nursery as part of a much larger corporation. It includes the value of the unsold inventory and plants under production. This provides a more realistic indication of the potential health of the business and reflects an increase or decrease in production volume. However, it may present a misleading financial picture because it will overvalue crops under production that have become unmarketable due to weather conditions, insects, disease, economy, or a drop in market demand. Here we are seeing an example of an accrual income statement or profit and loss statement. There are two categories: revenue, money coming in, and cost of goods sold, cost of fertilizer, chemicals, seeds, etc. At the bottom, we see the profit including actual and then broken down into corn and soybean. Here's another example of an income statement. This is an organic farm. We have farm receipts and operating expenses. The difference between the two is the net cash operating income. One of the ways to evaluate the success of an investment in nursery stock is by determining the costs of the various factors of production in a realistic manner and determining the true profit when these costs are deducted from the sales income. True profit is calculated as the net effective rate of interest returned on the investment made in the production of the crop or crops during the production period. When planning the production system for a nursery, after it has been determined what species of plants are going to be produced, it becomes necessary to determine the specific inputs that will be required, some of which are 1. How many plants must be grown to meet a specific market objective, 2. How long the production cycle will be and how much land will be needed, 3. How much manpower and skill will be required to carry out the various physical operations required for the production cycle, 4. What facilities, equipment, materials, and supplies will be required, 5. How much money will be invested during the production cycle, and 6. How the various factors, labor, machines, land, and other facilities, can be synchronized to produce the best production system. Because plants are the products of the nursery and are sold to produce income, a system must be developed to determine the investments needed to produce them. Most production nurseries produce many species of plants to make up the saleable product mix. Each species has its own special requirements in the way of material and labor skills, making it difficult to precisely determine the cost of their production. However, if species are grouped into larger categories such as shade trees, flowering shrubs, and so on, it becomes possible to determine average costs of production for these groups. It is impossible to place a true value on plant material growing in a nursery. This is because plants gain a true sales value only when sold. Up to that point, plants in a nursery have only a potential or an estimated value in the ground that could be substantially reduced by various economic, biological, or climatic factors. The first step is to determine what data are to be collected, how they are to be processed into usable information, and how much time and money will be budgeted to accomplish the goal. Two systems are available for estimating the long-term costs of producing nursery stock. The first system involves obtaining direct costs, obtained from daily timesheets and material records for labor and material, whereas the second system involves estimating labor requirements from productivity data, which were collected over a short period of time and updated periodically. In both systems, methods are needed for estimating costs of land, facilities, various overhead expenses, and interest charges. Many items go into determining profit that must be accounted for. By setting up ways to analyze the financial health of the business, shortfalls can be caught earlier and managed so that the business can succeed. One convenient and meaningful system for production nurseries is to collect and process the data using a computer spreadsheet software program such as Excel. Production projections begin with determining what specific plant varieties you want to sell and how many of them you think you can sell. You also need to determine what you will charge for them. Once the number of plants and size at the time of sale for each plant species has been determined, the land requirements for producing these plants can be estimated. Additional acreage must be added to the production space estimate for roads, retention ponds, and facilities for both field and container production. Typically 15 to 65% is added for field production and 15 to 45% for container-grown crops. Overhead is the total of all costs of production and cannot be charged directly to the blocks of plant materials. It would include management, accounting, office salaries, workmen's compensation insurance to cover employee injuries, automotive insurance, and pollution liabilities insurance, equipment, tools, buildings, loading, docks, and so on. Overhead is estimated as a percentage of total income and varies from 35 to 17%. Gross profit or loss is determined by the difference between total gross income and all production expenses, including overhead. Gross profit can range from 5 to 20%. One of the financial problems common to all types of nursery businesses is the highly seasonal nature of the annual sales cycle. It is not uncommon to find production nurseries that develop 50% of their annual sales during one quarter of the year. Cash flow problems result because expenditures precede sales and do not occur in a similar annual cycle. In many cases, the major cash outlay for labor needed in harvesting nursery stock occurs almost completely before nursery receives any income from sales. The fluctuation And income and expenses during the year require short-term financing during the periods of the year when expenses exceed income. A projected cash flow budget should be prepared and based on past cash flow data and the future payment and income projections. Here we are looking at a cash flow statement and it is broken up into quarters. Quarter 1 would be January to March. Quarter 2 would be the next 3 months, and so on. This is for a livestock operation mainly. In the first quarter, they have good sales of livestock. In the fourth quarter, they have good sales of livestock and corn. This is done quarter by quarter so that the business manager can see the cash inflow and outflow by quarter. In quarter 4, the cash inflow is $173,000 compared to $73,000 in quarter 2. So in quarter 2, you have to plan to have additional funds to keep the operation running. Ratio analysis allows a manager to compare the annual financial performance of a nursery as it changes with time and to compare it with other businesses, possibly with other nurseries. In margin management, the net profit margin indicates how well the net revenue, sales, is being used to cover the cost of operating the nursery. The net profit margin ratio does not indicate how to increase net profit, only that improvement could or should be made. This ratio frequently indicates that further financial and management analysis is needed to improve the net profit produced by the assets currently invested in the nursery. In capital management, the asset turnover ratio consists of net revenue, sales, divided by total assets, which indicate how efficiently the nursery uses capital. For financial management, the return on assets ratio can be calculated by multiplying the asset turnover ratio by the net profit margin ratio, canceling out net revenue in both ratios and leaving net profit over total assets. This ratio is an indication of the earning power of the nursery's assets. Earning power can be improved by increasing revenue, increasing pricing, or increasing volume. The leverage ratio indicates the degree of solvency, the degree the nursery relies on borrowed funds, of the nursery business. Because borrowed funds or capital have a fixed interest and principal payment schedule, a low leverage ratio, a modest amount of borrowed funds, indicates an ability to survive periods of reduced business and income because the fixed interest and principal payments are relatively small. For high yield management, the return on investment ratio is the best indication of profitability of the nursery. It can be calculated by multiplying the previous two ratios, leverage ratio times return on assets ratio, canceling out total assets in both ratios and leaving net profit over net worth. It indicates the relative success of the nursery in creating a satisfactory return on investment for the owner or owners. The annual operating costs study for members of the Horticulture Research Institute provides an opportunity to compare average data on production, marketing, sales, and management activities within a specific nursery to other similar nursery businesses. In summary, several methods for evaluating the financial health of the business was discussed, such as balance sheets, profit and loss statement, and ratio analysis.